Hey, welcome everyone. Hope you're having a good week so far. As you know, trading futures does involve risk and it's not suitable for all investors. Information in the presentation is for educational purposes. It's not a trade signal service, not intended to be financial advice. So I'm not sure if this 1 minute bar spike in the pre-market here is actually real or not. We had PPI at that time, so it very well could be. But that's what I'm using is the overnight high, these two, or overnight low, the dotted gray lines here. I'm gonna move this to our new overnight high. We do have Jerome Powell speaking at the top of the hour today, so that's really all for news, but that's gonna be the likely the market mover if there is one. You can see the last couple of days, Friday and yesterday, just kind of hanging out up here after 4 days of gap up. We haven't filled those gaps yet, or these two, the bigger ones from down here. But at this point, their only other gap up or gap above us is 52.67. It was so close yesterday to the high, and that's really it above us. So there's not a lot of consolidation above us either, just this one cluster to get through before we would punch through and make a new high. If we were to start pulling back, then I would look at a retracement from the swing low down here, two highs. What is likely to happen, you see how this 21 moving average is turning to the upside now. Let's say we just go sideways here. We could end up using a higher low. Even in that case, though, the 21 EMA, by the time, let's say 3-4 days go by and we pull back, we could be up in this 5,200 range. Now, there is a chance today if Jerome Powell's, when Jerome Powell speaks, tend to see the market sell off more than rally. So if we were to just drop today, maybe we move to 5,200 or even a little bit lower. But I don't put a bunch of stock in the moving averages as far as if it's pointed up. It doesn't mean that we will only go up, or it doesn't mean that we can't break the moving average, the trend line, and then it starts to roll over, and then 3 days later, you look at it and it seems so obvious. That's why a lot of people get tripped up on trend lines, I think, because you're looking at things slightly in hindsight when you're going back and looking at a trend line. And, like this area over here, we were going up, 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 and we were not violating the 21 EMA here. A couple of touches that were really clean and nice. Then you start to flatten out and roll over, and just looking at the swing highs and swing lows in conjunction with a 50% retracement, gives you a nice short up here. But at the time, the moving average is still kind of pointing up. It hasn't quite rolled over yet. So they're helpful in trending markets when you're, bouncing off of them. In range-bound markets, it can be helpful just to see that the trend line is going sideways. Something like yesterday, even exclude the gap up, but like towards the end of the day, okay, moving average is pointed sideways, so overall trend is sideways. But just by using basic trend lines as well, you can kind of get to the same place. If we were to throw, we've got a shallower trend line here, and then as we started to go higher, we have a very steep trend line. They're all pointed in the same fashion. I have my all-time high marked this prior swing high marked up here, and if we were to pull back and make a retracement, then you would presumably have a new swing low near the 50 or the 61.8. I did not trade yesterday. My accounts have moved over to Schwab now, or finished the migration. I had a few accounts go like 3 or 4 months ago, and then my main ones and the rest of them had moved over the weekend. Seems to be going all right. I did have to reset up my charts yesterday. If you're on Thinkorswim, you know, the setup tab up here, you can save a workspace, and that will give you most of the screen. But then if you go, you know, like this quick chart, you have to, what I do is I have a style saved called tick, and that's what gives me the background and the candle patterns and that kind of stuff. So 1 minute background. So it saves me a little bit of time to go in and adjust it. And then the study, we didn't have any extreme ticks yesterday. Did I not add that? No, it's still there. No, it is not. My tick study. Gosh, what is that even called? I'm gonna have to go find my tick study that shows the bubbles, the yellow bubbles on top and on highs and lows. Tick range, there she is. And I'm gonna have to go reset that up. Tick low is also yellow. Tick high, extreme ticks. The alerts, that's what I need to turn off. Those sounds. Alerts, tick high. Don't play sound, tick low. So if you're ever wondering on how to create the study on top of the tick chart, this is where it is. If you go to search Nicey Tick on eMiniMind, they will it'll pull up the study. And I'll have to make some adjustments here to change the colors. I'll do that. I'm just going to take it off for now, and I will finish that later. Man, I guess I could do it now. I'm going to take off 0 because I have that marked. And this yellow line, what is that yellow one? Tick low. Oh, you know what? We're just going to gray these out. I think that's what I need. There we go. All right, give us a little time, and once these nicey ticks, when you have a gap up like this, you tend to make your way down to the 0 line. I have another alert on because it keeps ringing at me. Play sound. Play sound. So new low tick. Why is it playing the sound still? Let's just turn the alert off and see if that does it. Alert 2. There we go. All right, so they are all disabled. All right, I think we're close. Moving average needs to come off because I added that separate. If you're not on Thinkorswim, you probably don't care about this, but for those that are, that's how I set it up. All right. Now, we've got potential for a hammer here off this 21 EMA, kind of a half. It's a 46.75 if it does want to trigger. If we break the low of the candle, then it's just a no-go. Small candle, only 2 points, which is nice. A little bit past, there it goes. A little bit past the half gap as far as trading through the 60-1-8. We'll draw up the short and see if it wants to go much higher. It was a pretty good week last week for 1 minutes. Thursday was probably the best day. What do we got going on here? These range. Got my stop below the low of that inverted hammer. I'll leave it there for a little bit. Tick BBL, is that what it is? There we go. All right, getting closer to this correct chart. Yeah, basically move right to this halfway back short. Oh yeah, I had that yesterday. That did not come back with me today. Those are easy. Oop, thanks, Mateo. I will go. So sometimes even if you go to setup and you save the workspace, it doesn't always save this quick chart. That's kind of the bummer, like the settings within the quick chart, because I did add those breadth and AD line yesterday, and if you save a style, that will save the background, but then you have to sometimes add the study. So maybe in another day or two, I don't know, the workspaces would have carried over, but otherwise, I think everything else is pretty much the same as far as my flexible grid, my active trader, all that stuff. You know, Mike, you could trail the 60-1-8. He was asking about like moving your stop behind the next 60-1-8 on the 1 minute chart. I don't do that. I just leave it below the low, but I suppose you could do that. I like the quantified nature of the low of each candle, or the swing low. There's a number of ways you can do it as far as trailing each candle, trailing swings for, a good portion of you who've been in the room or following for quite a while. I prefer to trail the swing lows when I'm long. So market rallies, pulls back, rallies, move it up under the next swing low, giving it some time to get away from your entry, and then once it starts ripping, turn to trailing each candle, like after you get 4 up bars. In this case, we don't really have 4 green bars with a new high. This entry candle is pretty small at 2 points, So that means the stop is 2.5 points because you got the one tick for entry and a tick below the candle for your stop. If we break highs, you could put your stop underneath that the breakout candle. So there's a few different ways you can look to reduce your risk or tighten your stop on the entry. The main thing is that you have to use the same trail stop approach so that, if this trade rolls over and it stops me out or just takes out for break even, so what? The next trade could end up being 8 or 10 points, but you're only going to get that bigger winner if you trail your stop the same way each time. If you're flip-flopping, then one time it does run and you wish you would have trailed it, so then you start trailing it, but then the next time it just peters out, and then you're wishing you just had a fixed target. So good chance this thing turns into an inverted hammer, and because it's the first trade of the day, I would be willing to put my stop underneath the low. So we're going to do 49.25. We got about 10 seconds. So I'm going to move my stop up underneath this low, 52.49.25. Because if I wasn't in a trade, yeah, you could reverse that and go short. But that is a nice short setup, which means that's where I would want to get out on a long setup. Get rid of this. Yeah, I'll take a stab doubling that up. We're at the overnight high as well. Still enough time before Jerome Powell speaks. And enough distance between, not a ton, I guess, 49. The moving average is 47. I'll take a stab at reversing it. I don't do that a ton. But like I said, if I wasn't in any trade, then this would be a nice short. If we break the tail, then, okay, so now you got to get rid of all the orders and re-add the stops since you've got twice as many. So no short, just the stop underneath that same candle, because this current candle hasn't closed yet. And pretty strong breadth in AD line actually for not much of a gap. I don't know why the bid ask here. You know what? That's not right either. I had that change yesterday too. Why can't I think of what it should be? Last net change. Let's go back to a screenshot. I can't think of it right now. Okay, so this one just closed and traded below 50.25. I'm just going to take that off. I didn't get my order in there quite in time, so I'm just going to take it off. Call it good. So not bad for a first little run. It's not really an inverted hammer to short. I'm just going to sit tight for now. Draw up the full halfway back for the day. Yeah, percent change. That's right. That's all it was. So we're going to get rid of this little hammer here, but right on top of the high. I guess we got enough time. We'll do the 15 minute at 53 long, 15-minute opening range high, or opening range breakout. Its high is 53. So we'll just put that in. The low is 44.25. and I'll just let that long, if it goes long, take care of the long instead of taking this little hammer here. I do like that that's right on the overnight high. I've been marking that lately, overnight high and overnight low, just as a place to look for trade setups. This guy, I don't want the -1,000 in view. There we go. Another small range to start the day. Yeah, I agree, Stan, that, there are times where I don't love, or where I'm not so convinced that the 15-minute opening range is going to get follow through in a certain direction. And there have been times where, as you know, you come up and gotten ticked out. Like it comes up, breaks highs, and then rolls over, breaks lows, and you get taken out of the first long. But then again, there's other times where you think 20 points, that's a long ways away. Break highs and go 20 points, and it does it in a matter of less than a half hour or 15 minutes at times. So I try not to micromanage it and let my viewpoints come too much into play there. Now we're just kind of chopping around doing nothing. It's going to be a waiting game till the top of the hour, I suppose. Later this week, pretty decent for news tomorrow and Thursday. Thursday, housing starts, jobless claims, industrial production. Tomorrow, housing market index, retail sales, CPI. Yeah, one trouble with trailing each bar out of the gate, as far as you get in, next candle closes, you trail the next bar. Sometimes the market can do a little shakeout or dip below that bar and then start running. So let's see if I can find it. Oh, like here. Okay. You got a hammer. So I know it's big, but let's say you trail the next bar, and then the next bar, you get this little dip below the prior bar. You get taken out, and then it runs. So finding that sweet spot between, you don't want to have a 10-point profit and have your stop down at break even or be still risking a full stop out. But giving it a little bit of room at the start can help you get those bigger winners. There we go. That's what it was. That's better. Not going to take this hammer either because we're just bumping up onto the top of the hour. And like I said, if it breaks up, then that 15-minute opening range breakout will take you up with it. So we continue to wait. If the range were bigger and we didn't have Jerome Powell speaking, here you have two little low points, swing low, third one. You break below that, this line here, this swing low, and then drawing from high down to the new low sets you up in a retracement short. It's nice when the low goes further down so that the 50% is kind of down near the tail of these lows or even right at the low. And then you don't want resistance to be coming up a point or two away. But that idea of breaking a swing low and then looking for a bounce into a short, if this was a lot bigger range, the negative 23 lines up with the 50% long. However, this distance between the 50 and the negative 23 is really only about 2 points. So that's a pretty tiny one. But that same concept, when the ranges are bigger, works really well. That's kind of what we're looking for on the 512 tick chart. Just looking at the 1 minute chart, it's kind of a slow, jumbled mess. If you're ever looking at a smaller time frame and you're kind of like, not really seeing much, go up a time frame, 1, 5, 15, and the 5 minute time frame here, showing bull flag. So still just kind of a waiting game. Even this move to the halfway back long, if you were to draw up the short and wait for that to break and then take a long off of that level, you're getting pretty close to highs. Just taking the halfway back short outright, your stop, 2 points does keep your stop below the low, but I wouldn't put on a trade right into some kind of news announcement or number, just because if you get a spike right at the news, then you end up getting taken out before it really has a chance to work or go your way. Yeah, you see, like at the Fed, the meeting announcement, the Wednesday afternoon Fed meeting announcement, you get a, up, down, all around movement. Sure, the resulting move might be the direction you thought it was going to go or the direction you tried to take a trade, but if it's up, down, all around and you get taken out, then it really doesn't do you any good. So might be a little bit sporadic based on various things that he comes out and says. So nice to sneak in that 3.5 points right out of the gate. If that's all we get today, then that's all we get. Let's see. Last week, I was a speaker at a guest panel or whatever you want to call it, guest webinar. I'll put the link to that webinar in the chat if you care to watch it, or more so listen to it. Doesn't have to do with charts and stuff. It was more talking about different things that you can do to kind of increase your chances of success, kind of across the board, all aspects of trading. And a lot of the stuff you've probably heard me say a time or two, but yeah, I use the same number of contracts across the board. I was just looking at this on Friday, though, as far as the candle size goes. So if you have a 2-point, so typically, yeah, if it's, a 2-point stop on the retracements and a variable stop size for the 1 minutes, I've just been using the same contract size across the board, whether it's a 2-point candle or I'll say 3.75 point candle, because I've been shying away from the 4-point and larger candles lately. But if you have Just do some quick math here. If you have a 2-point candle and you have 2 contracts, you're risking $200. Really, a 2-point candle is 2.5 points, so you're risking $250. A 2-point stop on the retracements is exactly 2 points, so $200. If it was four contracts, you're at $500 for a 2-point candle. If it was a 3 3/4 point candle and you risk those same 4 contracts, you'd be risking $750. So if you wanted to dial it down, let's say if it's over 2.5 points, so we'll do that same 3 3/4 point candle size. If you only traded 3 contracts, now you'd be down at like $562.50 for your stop size. That keeps your risk a little bit more in line. If you dial it down to 2 contracts for the larger candles, you'd be under $500 risk, and that would be fine. But just dropping it by a contract is also okay. If you have a larger candle, chances are you have a larger, there goes a 15, you have a larger, more movement with bigger candles, presumably bigger profit target. So you could say getting away with a smaller contract size is going to give you, the idea is you're getting the same reward to risk, and even if you have a smaller contract size. So if you want to futz with the numbers a little bit like that, you can. I know I've been talking to more people who've been going through and getting to the funded account level at Top Step lately, and so that contract size and risk and some of those questions have popped up a lot more in Discord and email and stuff. So it's been a little bit more on my mind as people bring that stuff up, and that's really one of the nice things about those type of platforms or trading routes to go with a Top Step or various other platforms is you do have to really think about your risks, your contract size. You can't just sit there and swing for the fences. So you can develop a lot of good habits without using your own capital, so to speak, some fees and things, but asymmetrical risk when you consider the amount of size you can trade, and then that concept of trading multiple accounts and having your contracts, your positions just mirrored across all the accounts or copied to all the accounts. You can really do a lot, but you need to you don't want to just get to the funded account stage and then go bonkers. You need to build a cushion in your account, and you kind of have to do that with a smaller contract size so that you can build up. I mean, this is what you do this is what I did in my personal account too. You sort of scale up slowly, work your way to 2 contracts, and then you can get up to 3 or 4, and you stay at that point for a while. And so you build up a cushion in your account, because if you go from 2 contracts to 4 contracts, well, now your risk has doubled as well. And if your first 3 trades with the next contract size up are losers, well, now you're taking a bigger hit going back down. You need to be able to sustain a drawdown right off the bat. So take whatever your biggest drawdown was with 1 contract and then double it for 2 contracts, and make sure you have that amount of money in your account on top of like your starting balance, or that needs to be your cushion and a little bit more, just for that little bit extra cushion, so that when you get to the bigger contract size, you're not going completely backwards, like below where you started on your smaller contract size. And then when you get that cushion in there, you have a couple winners, couple losers. Now obviously the winners are bigger, so you're moving ahead quicker, and then you can kind of get to a comfortable, let's say you settle on 4 contracts and you do that for a couple of months, and you're getting in a groove and you're building up a building up your account. Okay, now when you start to take drawdowns off your account, like I just said, a weekly dollar amount, um, and it's it's small enough where it doesn't really affect how many contracts I'm going to be able to trade the next week. So whether I don't trade that week or not, I have enough cushion in my account to where you can just take some off the top, and if you have a slow week or even if you had a down week, you're still your account still has room to trade contracts, go through a drawdown, go on vacation for a couple weeks, and then you're not really playing with the house's money, but it does feel different than uh, starting with $50,000 and then it's like if your first trade is a loser, okay, now you're at, say you did two contracts, now you're at 49,800, and just getting that cushion built in. It's kind of like getting into a free trade or getting into a trade where you've taken a profit already, you've got a couple contracts left. Now it's like the worst case scenario on the trade is a winner, so it can kind of free up your stress level or capacity to think objectively. So I'm going to draw up this next retracement. I actually kind of like how the high back here is about where the 50% retracement long is here. Since I've got the 15-minute opening range breakout, I don't think I'm going to take this one. We're still barely moving. I mean, we're still inside yesterday's range. Yeah, the pace is very slow. The 512 tick candles are forming very slow, and I'm guessing Jerome Powell is going to speak for a little bit. So if he does come out and say something, um, could shake things up here. But we'll just kind of sit tight. Like I said, if all I get is that 3.5 point little 1 minute so far, and that's how it takes us to the end of the session, then so be it. Yeah, email. I don't know. Well, I know with Top Step, just because that's what most people are using, and I've chatted with traders about you have your loss limit, like your total drawdown that you can't hit, and then your profit target. So, and maybe there's I should look closer at the rules. Maybe if you had one winning trade, yeah, here's that sell-off I was kind of envisioning. Let's see if we hold this 50% or not. If we do start breaking the 60-18, then looking for a short setup might be worthwhile. We still have the unfilled gap below us, and whenever you have an unfilled gap on the day, there's always going to be some traders trying to get to that point. So it does create a little bit more, in this case, gives sellers a little bit more weight, or there's more of them. But going back to your question, if you had one trade and you made the profit target goal, by kind of swinging for the fences, let's say you traded the max number of contracts, you took one trade and it ripped and you got funded, I certainly wouldn't continue that path of going max number of contracts with the funded account. I would scale way back and make sure that you have, a repeatable setup that you can use day after day and then build up slowly. Otherwise, yeah, you're right. You get to the funded stage, and then if you blow your account, hit that max loss limit, then you got to start over, go through the combine, go back to the funded stage. You don't want to be in that cycle of like, bam, get your funded account right away, and then you trade for a week or two on the funded account, and you really haven't reached the point where you're going to start taking withdrawals because you want to build that cushion, and then boom, you lose it. You go back to the combine or the valuation, and then you're back doing it over again. Ideally, you trade the way you trade, and you go through the combine. If it takes you a few weeks or a month, whatever, and then you get to the funded account, you just keep doing what you're doing, and you have more capital available in a sense. Not, not really. The most important thing is the drawdown. So once you get to the funded level, and then you get, I think the $50,000 account is a $2,000 drawdown. So once you get to $50,000, once you start your funded account, and then you get to $52,000, now you're beyond the drawdown, or like 52,500, let's say. Now you're $2,500 up. And so you still want to build more cushion, but your drawdown doesn't keep going up from there. It just stops at 50,000. I think it's 50,100, and then everything else on top of that is cushion. So you don't want to take out $2,000 right away, otherwise you don't have that cushion anymore. So you need to build up that cushion. All right, so selling off, probably going to come down here and take out the low and fill the gap. Didn't really make it up to this 50% right here at 53. Really it'd be a 52.75. We came up and touched it, I guess, but otherwise still kind of not a super convincing direction. And not, came up to the negative 23. Nothing at the full halfway back either. I need to get the 30-minute high marked here in the low. That'll look like that. So I'm going to keep sitting on my hands here. If this forms a hammer, I don't love the positioning of it because you're kind of at the midpoint already of the 30-minute range. Not exactly, but you're a point or so away. I would prefer, you've heard me say this, where like the hammer, the head of the hammer is kind of at the 30-minute low. Let's pretend that line is the 30-minute low, and the tail is sticking down below. So it's like we've broken the lows, price was rejected, and we came back up, and then now we're sort of right at the bottom of the 30-minute low. This one does have a little bit of room to go to this halfway back short, but like that, I'll draw that one up. But anytime we're inside the prior day's range and then inside the 30-minute range, and we're closing in here on the almost to the hour mark, I definitely tend to back off on being aggressive with trying to make something happen. If it's early in the day, sometimes I'll take a trade. Might not be the prettiest looking setup, but it's early enough in the day where there's not really a strong direction that has formed. And if I do get taken out, and then let's say I was long, I got taken out, and then we broke lows, well, then you can start to gain some momentum, and then you have time to get in the short trade and ride that wave down. So as you get later into the day, sometimes that gets a little bit less likely. But our breadth and advanced decline line are still pretty strong for as small of a gap as we have, and for being inside yesterday's range. That breadth, that volume ratio is pretty strong. Back at our 50. So if you look at the distance between the 50 and the 61.8, if that distance, by the time you, in this case, you would round down 50.38, take it down to 50 and a quarter, and then subtract a tick, so 50, 52.50. By the time you add those 2 points, if that stop puts you outside of the 61.8, then it is fair game to place the trade, because at the very least, if it does fail, your stop is outside of that failure level. But again, on a day like today where you're inside of yesterday and inside the prior day's range, these trades in the middle of the range just don't get reversals. We just kind of ping pong between the top of the range and the bottom of the range. In this case, we didn't quite tag up on the low end of the range, but look, there's just no, I guess you could say there was like a 30-second pause here where we dip down, but there's really no major reversal, and so that's where you can really get chopped up. So if you can identify the middle of the range, you say, well, how do you do that? Okay, well, you first start by marking the high and low of the 30 minutes, and then that gives you a boundary. It's easy to spot or to identify the prior day's range, high and low, and just looking when I start the morning where we're opening and how we're trading relative to the prior day. Just those basic observations can really, really help help with your trading decisions for the morning. This dotted line was the overnight high. I'm going to get rid of that since we're traded above and below it a whole bunch, and we're back up at highs. 15-minute long still holding, so we'll just sit on that. Not a huge range on the open, so we got to get basically to like a 73 and a quarter. And what did we say that unfilled gap above us was? 67. Still didn't come down. So one interesting thing to note, or noteworthy thing, is we sold off and we were not able to break lows and fill this gap. So then that's what you're seeing in the breadth and advanced decline line. The buyers and the buying volume is much larger than the sellers and the selling volume. So probably not going to fill the gap now that we had a good run at it with rolling over like this, and now put in this big V reversal and then taking off to the upside. If I didn't have the 15-minute opening range breakout on, then be more inclined to maybe take a long down on the lower end of a range. I try not to let the 15-minute influence my what I would call intraday trades, trading decisions too much, but I can't say that it doesn't entirely. So kind of an inverted hammer here, but I don't like that as a short. We're just too much into open space up here to try just shorting at highs essentially. Need to adjust one more thing here. Appearance, bars to the right. Where is that at? Price axis. Here we go. So if you ever want like empty space to the right of where the last candle is, this bars to the right, if you change it to like 5, then it's going to move that over a little bit to give you a little space between the edge of your chart. That's a little too much, and so I'm going to go down We'll just make it 3 bars, just so it's not butting up right on the edge of the chart. I don't really care about seeing the price levels on the NYSE tick. I just, I see the extreme high and low, and then I can just hover over it. So I'd rather have more space for my actual chart, so that's why I bring that over a little bit more. At the hour mark, inverted hammer, 2.5 points, so that's a 3-point candle. So going back to our conversation earlier, 3 points, if you had 4 contracts, your $600 risk, if it was a 2-point candle, you'd be closer to $500 risk. So it's getting, if you're trying to keep your risk to $500 max, then you would want to adjust your contract size down, even if it's just by 1, for slightly larger candles. You're keeping the risk the same, which in some senses keeps the profit reward to risk ratio the same. If you have bigger candles, like I said, you're going to have probably bigger ranges, and you'll probably have a bigger profit or a bigger run. So for the same reason, like you wouldn't just trade 100 shares of every stock. You need to look at, well, if I'm risking $5 per share and I want to risk $100 total, then you divide 5 into 100, you get 20, and you buy 20 shares, your risk is 100. If the risk was $50 a share, then you would only be buying 2, 50 into 100, and that would, both trades, you'd have $100 risk. This is kind of nice here, 58. These 2 tails, and give it a shot. It's small enough. We're starting to flatten out, whereas back here we're going straight up, straight up, straight up. Here we've kind of moved sideways a little bit. Let's see if this wants to drop a little. We're at the hour mark, which is when you tend to get more of a reversal. And I like that the candle was smaller. So let's see if we can come down to the top of the 30-minute range. It's not quite the 50%. Oh, actually, oh boy, it's perfect. But not the low, because the low was back here. But pretty dang close. If we get opposing tails with a hammer, we may just end up ripping and going higher. Here's a little break of a swing low here too. So going higher than this is going to be trouble for shorts anyways. 59. I'm going to go ahead and just put my stop at 59 with that hammer there. And more so because I don't want it. If it goes above the hammer, it would likely rip the rest of the way. And if sellers are going to come in, they should be able to do it without breaking the high of the hammer. So it's like, again, asymmetrical risk. I've cut down my risk, but I'm still in the trade and still giving it the opportunity to go short. I don't want it to come up breaking a hammer. I know it's kind of close to highs, but bulls are going to see that as, reigniting the bull run. So, and if I had a whole bunch of, profit locked in from the morning, okay, maybe giving it more room, but in this case, just the one trade didn't really, 3.5 points is not nothing, but it's not that big. So and this swing high here is kind of the kicker as well, 59, 1 tick above there, and hey, what do you know, that's 1 tick above the hammer. So I like that you have the 2 tails, 2 topping tails. It's like bulls had 2 chances, and even really 3 back here, 1, and then the doji, and then the inverted hammer. So if there's going to be a little pullback here, this is where it should happen from, the hour mark, right off this candle. But even so, a move down to the halfway back is only about a 53, and we're at 57, so 4 points. So again, smaller ranges, smaller movement overall on the day, like the trends within the day. Come on, little buddy, just break by one tick and we'll get that drop there. All right, now you can drop at least to the 21 EMA. Getting pushed back up. All these bottoming tails. When this candle closes, I'm just going to trail each bar on this rundown. Because as soon as we start going up, we should just be right back to highs. It's taking a while to get them move down. 3 bars of move down and then push back up, move down, push back up. So we're at a 57.75 is the high above this bar. We need to get another candle that closes down in the low end of this candle to get us moving. There we go again, just pushing right back up. Got this halfway back short, so maybe we roll the rest of the way to the 30-minute high. This green bar is inside, so I'm just going to leave my stop at 57.75 because it's one tick above the breakdown bar, the red bar that made the low. This green bar did not make a new low. So if you come in and put your stop above it, you're probably safe here in this case, but if you get like a bull flag and you come in and tighten your stop on those inside bars, you just want to give it enough wiggle room that you have less chance of getting ticked out. The other thing I will say so another reason that I'm audible and move my stop above this hammer here, when the breakdown bar, like the entry candle, in this case it's a short, the high of that bar is in the lower third of the end of the signal bar. And then you get that move down to make a new low. It shows that there was not much pressure. There we go, getting a little bit lower. Not much pressure on that signal bar to push up, and a quick drop. It's like if this 2.25 point candle, okay, now the stop's going to go to 52.56.75, and we just keep trailing it down each bar from here. This is the 50% and the oh boy, if we just rip through this 61.8, then we're just going to go right back to 52.44. That would be very surprising. Had this very strong V reversal that went up like nothing. So, as Stan said, with Jerome Powell speaking, it's just up, down, all around. Yeah, I suppose you could trail the 512 tick chart in here, but when the candle, the size, blah blah, the time frame that I enter on, is the time frame I like to manage the trade on. So now we're going to go to a 52.54. This candle's getting a little big. We're kind of at the middle of the 30-minute range, but yeah, we're just going to keep trailing each candle and see how far it takes us. Now we're talking. So I realize at this moment, a 54 stop is far away from the current price, but we're talking 25 seconds, and look how far down this candle we are. We'll be moving our stop to 50.50 in about 15 seconds. So that doesn't bother me too much to temporarily have the stop so far away, knowing that we're going to move it here, 5 points lower, whatever it is. 50.50 in 3, 2, 1, go. Yeah, now we're cooking with gas. And that unfilled gap is still just a little bit below us, almost there. There we go. 15-minute orb stopped out, but that's okay. It was a small range, and clearly the up move has lost its momentum. So definitely not the kind of year so far for the 15-minute orb that the last 2.5 years had been, but like we said, with smaller ranges, that's just a bit of a side effect. So we need to be at 47.50, getting close to it here. This hammer, I'm not going to reverse because we're getting late in the morning, but that is the right kind of hammer where the tail is below the 30-minute low and the head is fairly close to the 30-minute low itself. Filled the gap. So yeah, likely going to get a bounce, but that's getting a little bit big as well. 4.5 points, so 47.50, couple ticks away from getting hit. Did come down into a low tick. And this is something that gets people tripped up a lot. This candle, this hammer candle of 5 points, you might say, oh, I should have just taken it off at the low of that candle. Like, if I put my stop above the high of the candle, I'm giving back 5 points. But by trailing each candle, if I had that same philosophy, I might have taken the trade off way up here on this candle that is 2.5. Well, let's just say this candle that's 3.5 points, or even the next one that's 5 points, saying, oh, I should have just taken it off, on that candle itself. But by trailing your stop, it allows you to be having the conversation of taking the stop off, now you're 5-10 points further down. So arbitrarily coming in and just taking the trade off because, oh, we're coming into the top of the 30-minute range. I think there's going to be a bounce there. Yeah, there's a good chance that there's a bounce, but if you just continue trailing your stop, then you're in the trade when that support level fails, which typically yields to a strong move in the other direction. Like if you have a hammer and you fail the low, break the tail of the hammer, there's usually going to be a stronger move in the down direction. And then you're already in the move, you're not having to chase it. So I'm totally fine with my stop at 52.47.50, even though, there's 5 points of quote unquote unrealized gain from the highest profit of the trade, because by trailing my stop down, it kept me in to this point, and I didn't get, scared out back up at, 10 points higher. Kind of getting a bear flag here. These lower highs, but also higher lows, so it's like a triangle. Nothing to do with the stop. This will be a big one, even if it doesn't go lower, even at 47.50. Feels like it wants to go higher. You got the low tick, you're at the bottom of the 30-minute range, filled the gap, kind of getting into that latter part of the morning, the latter part of the session, knocking its head on that one tick away multiple times. This is kind of like a ascending triangle where the lows are getting higher and the highs are the same. But in the context of a downtrend, it could still go either way. You break this uptrend line on the lows and you immediately drop down to lows. If you break the horizontal top end, then you shoot up to the 50% short, or kind of the middle of the range, 21 EMA, whatever. Let's see if we can keep going down. I usually go all in or I always go all in as far as adding or scaling in or adding contracts. It's okay if you want to do that. I don't have a ton of experience with that. Like say, get short below the inverted hammer, and then we get short below the next bar, or when we start consolidating again. I feel like if I'm getting in at my entry would be the best entry point, or the the closest entry to my stop, if that makes sense. It's starting to look like we could break to the upside, especially if we get a hammer, about 10 seconds, get a hammer, break it, and push up, and then it would take us out. And that would basically call it a day. Here we go. Probably going to push through here. There it goes. All right. Not bad. Not bad at all. 10.5 points on a day that really didn't give much for setups. This one I passed on, but that's okay. So I think we'll leave it there. Going into the rest of the week, I'd watch for, like, we're getting this consolidation here, moving sideways. If we start creeping up tomorrow and Thursday, or even just creeping above these highs, then we should have no trouble retesting the all-time highs. If we sell off later today, then probably move down to the 21 EMA and then watch for signs of a bounce or just breaking right through. But this kind of consolidation cluster is definitely the more challenging, slower, tighter range bound area to be trading. So hopefully we can break that in the next day or two. But yeah, we'll leave it at that for today. Not bad. I'll take it. I mean, just 14 points on the 1 minute. You can do a lot with that. I didn't really see any retracements today, so. Anywho, if you have questions, shoot me a note, either email or in Discord, and hope you have a good rest of your day, and I will talk to you all soon. Thanks, everyone.